day. So we're looking forward.
No, but I can really say
We are live now. Shafiq.
Shafiq, you are mute.
Yeah, we are live.
Okay. So we'll just wait for a minute or two, and then we will start the. I think we should start now. Members will join a bit late. That is fine. What do you think, guys?
Oh, how many?
Yes.
Yep.
Yeah, we should start now.
Okay, let's start.
Yeah. Good evening, everyone. Welcome, members, after a break. I think after the annual seminar, this is our first event. And I hope you all are keeping safe and doing well. We heard that Abu Dhabi is opening soon. And it is a good news, as well as I would say we need to be a little cautious. Definitely, it is a good news that we will be able to freely travel, and people and ourselves, we can travel either way. The borders will be opening, hopefully. But we need to be very careful and be extra cautious on our outdoor activities. So be careful, don't start jumping around, and take all proper precaution. We are thankful to all the members who participated in the annual virtual conference. And thank you for all the kind words and nice words of appreciation. We got a lot of feedback, positive feedback from across our members, the managing committee, and the members across the other chapters of the globe, from India as well. And thankfully, because of the virtual event, we could see a lot more participation across the globe. And the feedback was right from on the platform that we used, the way it looked, the way it was made, speakers, the lineup of speakers, entertainers, and of the speakers, the duration that we kept for each speaker not exceeding more than 40-45 minutes, and most of them were like below 25 minutes. The voucher, the delegate we handed over to all the participants. There were a lot of appreciation for that. A big thank you to each and everyone. We continue to embark on our journey for distance learning, and the success is getting people to do the right thing at the right time. And that's why we are here today. The economic substance regulations, notification and reporting deadline is fast, and we are here to clarify minute details. While filing the notification or the report, you may come up with certain discrepancies or think you're not absolutely sure how to fill in and what to fill in. This is where we need an expert to guide us. We have here two experts today who will be taking us through the filing and as the changes that has happened in ESR regulation. The chapter has continuously engaged with all the stakeholders, members, sponsors, well-wishers by doing us on professional and social event. The management committee is also planning few more sessions on robotics, Tally software. They have come up with a big update, and it will be really helpful for all those finance professionals who are using Tally. The changing role in finance by Team Oracle, with the changing scenario in terms of automation, in terms of online, how it is affecting the finance professional as well as the finance group as well, the finance function. also plan to have a big event on Union Budget 2021 somewhere in February as soon as the budget is released. So we have started putting in time and effort to plan that as well. Welcome you all to the virtual event on economic substance regulation by CA Hanumant and our own Anurag Chaturvedi. We request everyone to be safe and please follow guidelines, although we have not seen what guidelines are coming up while opening up, but please take extra care. That is my request to everyone. And I now hand over to CA Shafiq Nalil to take it further. Thank you.
Thank you, Neeraj. I'm CA Shafiq Nilal, committee member and member media and student affairs. So today my role as introducing speaker is going to be very simple because both speakers of today are very familiar. I mean, in fact, when it comes to the ESR, the last two sessions we had our own CA Hanumant Kumar to talk about. And whenever we talk about VAT, the first name that comes to our mind is CA Anurag Chaturvedi. So he is another speaker today. So just as a formality, let me read out their profile. I will first introduce our first speaker, CA Hanumant Kumar. CA Hanumant Kumar is the founder and managing director of MCA Management Consultants. He has more than 2 decades of experience, professional experience, and mostly in Dubai, 20 plus years in Dubai. He's well known for his business connections and industry networking in GCC, India, and Africa. He has worked in several reputed organizations in various positions before founding the MCA Management Consultants in 2009. He's blessed to work under the guidance of several past presidents of ICAI, including CA Ashok Kumbhat, CA T.N. Manoharan, CA Kamlesh Vikamse, and Nilesh Vikamse. He is the past chairman of ICAI Dubai chapter. He has served in all positions in Dubai chapter of ICAI for 8 consecutive years. And he has a record in his name. He is the youngest chairman of the chapter in the history of Dubai chapter. He was instrumental in changing the constitution of the chapter and lead the automation project successfully completed in a record time of 4 months. He has chaired several sessions in international seminar conducted by Dubai chapter of ICAI. He has addressed on several technical topics on VAT, excise, AML, BEPS, ESR, the list goes on. And in various professional and business forums. So his areas of expertise include audit, consulting, forensic audit, taxation, transaction advisory, fixed asset management, business strategy, international taxation, BEPS, ESR, transfer pricing, mergers and acquisition. So I don't want to take more time to introduce Hanumant Kumarji. So let me move on to our next speaker, our own CA Anurag Chaturvedi. As CEO and managing partner of Chartered House Tax Consultancy, Anurag Chaturvedi leads one of the young and dynamic professional service organizations in the UAE and UK, with experienced and tech-savvy professionals providing service to more than 20 distinctive industries. For more than 17 years, Anurag has had a distinguished career serving large and complex global clients and has served as specialist in tax enablement, automation, business transformation, governance, and risk management across multiple countries. He previously led senior advisory positions with Big Four and leading global firms, and is currently an executive committee member of ICAI Dubai chapter. He regularly writes in media on topics related to tax, economic business trends, the new business reality, and the dynamics of technology impacting business. He gives lectures on tax and technology in various forums, including ICAI, IBPG, IBPC, and so on. He is regularly featured in College Times and The National as VAT expert. Anurag was recently interviewed in Radio 106.2 FM on Views You May Use segment to discuss critical aspects of VAT in UAE impacting individuals and professionals. Anurag is a chartered accountant, fellow international accountant from UK, and associate member of CPA Australia. CA Hanumant Kumarji, you can take over the proceedings from here.
Thank you. I think you can give me access to share the presentation. Yeah, Is it visible to everyone?
Yes.
Yeah, okay. Thank you very much, Neeraj and his team for the kind introduction and for inviting me to address the conference to the Abu Dhabi chapter. It's always a pleasure to address our own chapters within the region. So, without taking much, because today a lot of subject is there to address within the short time of 1.5 hours, then we wanted to take Q&A. So let me directly get into the subject. So today, the most crucial one now, where we are, nearing the deadlines, we'll be looking at either notification for the first time or re-notification, as well as together we are also going to touch upon on the annual return submission also. So today the session will be addressed in 5 sections. First section is on amendments and in definitions, very important to know, and amendments in relevant activities, amendments in governance disclosure penalties, then the test. So these sections will be covered by me. I think I will cover economic substance notification, and my fellow speaker Anurag will cover on report, ES report, and he will also touch upon on the UBO regulations as well. So everyone over here may be aware that economic substance regulations are introduced on 30th April 2019, and it is applicable for the financial years starting on or after 1st January 2019. Okay, there has been significant changes have come subsequent to the earlier regulations. So earlier regulations and guidances were repealed, and Ministry of Finance has come out with a new regulation, which is 57 of 2020, as well as a new guidance, which is 100 of 2020. So if you look at in this slide, you will see all the red ones now, which are not really needed. These are all the repealed ones, and the new regulations are in the blue one. So in August, both the new regulations as well as guidance note has come. In September, frequently answered questions have come in the website, which is available in the Ministry of Finance site. I request everyone to go there and check, because it's around 40-50 questions are there, well articulated, and it gives you the good meaning of the concept, well explained by the Ministry of Finance. Then October, end of October, both notification as well as report templates have been released by Ministry of Finance. Then 1st December 2020, the both notification as well as reports portals went live. So what are the key highlights of the new regulations which have been introduced in August? So they have defined licensee as well as exemptor licenses, a new concept that was brought in. No longer government entities which are 51% and above held by federal or local governments are no longer exempt. There has been substantial changes in the definitions of connected person, foreign connected person, as well as some changes in the relevant income. So because of the substantial changes in connected and foreign connected person, the maximum applicability is to a distribution service center business that has undergone a lot of changes. So we'll cover in detail about that in the subsequent slides. There has been new definitions given for what is group, what is M&E group, and they also defined what is consolidated financial statements. And clarification is given on branches, and not all relevant activities were changed. Some have changed. Significant change has come in distribution service center business. We'll cover that as well. Now regulatory authorities are no longer having bigger powers, so the independent assessment and evaluation powers are given to independent authority, which is Federal Tax Authority, to be the national assessing authority. And unlike earlier, each regulatory authorities had more or less a similar either portals or formats, but now that it has gone to FTA, Ministry of Finance has come up with a common portal. So the reporting formats are same for all the licensees across UAE. And recently, Minister of Finance has conducted a webinar where they mentioned very clearly if an entity, if a licensee is not carrying out any relevant activity, there is no need to file notification. Earlier, there was some confusion was there whether notifications is going to be filed or not. They made it very clearly, and I think 3 to 4 times they repeated, saying that there is no need to file notification if the entity or a licensee is not carrying out a relevant activity. And as far as economic substance regulation tests are concerned, there are no changes. Even the new regulation, old regulations, maybe some guidances have issued on certain areas. So we'll cover that in the subsequent slides. The first section on amendments and definition, they're given a new definition of licensee. They said that either a juridical person incorporated inside or outside the state, or an unincorporated partnership, either limited or a general partnership, registered in the state, which is UAE, that carries on a relevant activity. Only ESR regulations are applicable only to those. And in the frequently answered questions, they have clearly mentioned a natural person, sole proprietorship, trust and foundations are not considered as licensees. I've seen in one of the chat box, now somebody asked, so let me clarify on this sole proprietorship actually. See, sole proprietorship means there are differences between a license issued by the sole proprietor as well as the licenses issued by the free zones. Free zone, you'll have to lift the corporate wheel and see whether company is different from shareholder. Whereas in the DED, there is no capital clause in that. There are no shares issued in that. So owner himself is the sole proprietor also, which is known as establishment license. So in that case, I mean, based off my knowledge, economic substance regulations are not applicable because this is as good as a natural person entity. Whereas if you go to the free zone, okay, it is a company where shares are issued to one single shareholder. So company is different from shareholder and it will have a limited liability, and that will become a juridical person and it will fall under the definition of licensee. Hence, ESR is applicable to those. And they brought a new concept of exempted licensee. So in those cases, only notification is required. There is no need to file a report, provided you provide the supporting evidence substantiating its status to claim as a exempted licensee. In case if you are not in a position to give any sufficient evidence, then the entire regulations will be applicable. In that case, you will have to go through the test. You will have to also file the report as well. Let us look into overall those categories. One is a licensee, that is an investment fund. Second is a licensee, that is a tax residence in a jurisdiction other than UAE. Third is a licensee that is wholly owned by one or more residents in the UAE and meets two conditions. One is it is not part of a M&A group. It carries out business only in the UAE. The last one is a branch of a foreign company. It means branch of a foreign entity which is subject to tax in the foreign jurisdiction other than UAE. In these four cases, you can avail the exemption. Again, as I mentioned earlier, if you will have to give supporting evidence substantiating that it is an exempted licensee, otherwise you will lose that exemption status. So let's look into these four cases. It's important to understand these four cases. In case of investment fund, both the fund as well as the intermediate entity, which is normally, they use the next level entity to invest into the company. So both the fund as well as the SPV, okay, which is used as a sole purpose to invest into the investee company, both are exempt. But the company in which the investment has been done, which is a portfolio company, that exemption will not be there for that. It's only for the fund as well as the SPV. And a licensee that is a tax residence in a jurisdiction other than UAE, there are two type of entities will come. One is an entity which is a tax resident in a jurisdiction outside UAE. Entities in UAE, for example, look at the right side. You have a UAE free zone company where the management and control is in Ireland of that particular company, and the entire UAE free zone company's income is taxed in Ireland as good as an Ireland company. In such case, UAE free zone company can avail the exemption by giving the evidence to uh, uh, Minister of Finance. Second entity is where an UAE entity carries on a relevant activity through a branch registered outside UAE. It means UAE having a branch outside, and it is and such branch income is subject to corporate tax in that country, and it is a tax resident other than the UAE. In such case, in these two cases, you can avoid the exemption. Of course, you'll have to provide the supporting evidence to claim the exemption. Third, which is very, very important, is an entity wholly owned by UAE residents. So what does it mean? It means wholly and beneficially owned, either directly or indirectly, by UAE residents, provided it is not part of a M&A group. All the activities are exclusively carried out in the UAE, and the UAE resident owners of the entity reside in the UAE. So the entity must therefore not be engaged in any form of business outside UAE to avoid this exemption. If you look at page number 6 of the guidance note given in notification, they said licensees wholly owned by UAE nationals or UAE resident individuals that are not part of a M&A group and that carried out business in the UAE only. They also mentioned in the bracket, including activities that are not relevant activities. So here is there is a room for interpretation. What is not relevant activities? So all activities other than relevant activities are not relevant activities. So what happens when a UAE entity does an import or an export? Will they qualify under exemptor licensee? I suggest that everyone take a conservative approach, okay? Because here most of the entities, one leg, even if you have an import or an export, it is better to file the report, because in any case you are to give information on the shareholder structure as well as the financial statements. Till you get a clarification, if you are carrying out on non-relevant activities, which involves one leg outside, it is better to file the report also. They also define who are UAE residents. It means either UAE citizens and individuals holding a valid UAE residence permit who reside in the UAE. M&A group includes two or more entities, the tax resident of which are in different jurisdiction. One is in, say, UAE, one is in a different jurisdiction. So they fall under a M&A group, or an entity that is a resident for tax purposes in one jurisdiction and is subject to tax in that jurisdiction, whereas the activities are carried out in another jurisdiction. Okay, for example, like the way I mentioned here, UAE free zone company is established in UAE, whereas it is subject to tax in Ireland. Such cases, they fall under M&A group. So let us understand with some examples. Assume that company A and company B are in UAE, both are group entities. So if there is any transaction happens between these two entities, so they fall under the exemption category. I mean, this ESR is exempt for them. Whereas if you see, you have two entities, company A and B within UAE, whereas you have another entity of the same group which is in Oman, whereas Oman is subject to corporate tax in Oman. So the minute one entity is outside in another tax jurisdiction and two entities are in UAE, then these whole three companies will be part of M&A group. So obviously the exemptions will not be available for such entities. So the fourth category is a branch of a foreign entity. For example, you have a branch of a UK entity, and assume that the branch in UAE is subject to tax in UK. In such case, the UAE entity can avail the exemption by providing evidence saying that your income, this UAE entity's income is completely taxed in UK. So in such cases, they can avail the exemption. Now, let's take an example. Parent company is in India, and you have a branch in either mainland or a free zone in UAE. In such case, mainland and free zone assume that it is getting taxed in India. So you can avail, this entity can avail the exemption. because your entire income is subject to, is getting taxed in India. Look at another example. You have a mainland or a free zone entity in UAE, parent companies in Bahrain. Since parent company in Bahrain doesn't have a corporate income, a corporate tax in Bahrain, this particular entity, mainland or a free zone in UAE, cannot avail that exemption because it will be subject to tax in UAE. So to summarize, the regulations are applicable to UAE onshore entities, free zone, UAE offshore, as well as branch of foreign entities, unless they satisfy the conditions of exemption. Okay, who are all exempt? Investment fund, both the fund as well as the SPV at the next level. Entities that are tax residents outside UAE, entities wholly owned by UAE, and all activities are carried out in the UAE. The last category is branch of a foreign entity whose income is subject to tax outside UAE. As mentioned, natural person, a sole proprietorship, a trust, and a foundation, those will not come under the definition of licensee. Hence, ESR is not applicable to them. So there has been a significant change in the definitions of connected person as well as foreign connected person. Now they said that an entity that is part of the same group as licensee or an exempted licensee is known as connected person. Now an entity that is part of the same group, let us see what is group. Group, they said two or more entities related through ownership or control such that they are required to prepare a consolidated financial statements for the financial reporting purposes under the applicable accounting standards. I've just taken IFRS because this is commonly used in UAE. So by virtue of ownership or control, if they are required to prepare a consolidated financial statements, then they come under the group concept, the group definition. Many people ask this question, okay, we are not preparing consolidated financial statement, what happens, So whether you prepare or not, you don't prepare, whether if you are ought to prepare or required to prepare, this will, then they will fall under the same group. And if there any transaction takes place between the connected person, then the regulations will be applicable. Who are foreign connect, again, if you see in IFRS 10, you all may be aware that a parent company is required to present a consolidated financial statements, provided it controls one or more entities. Okay, and you all may be aware about the control definition. It comes with the power either to power to control the voting rights, or power to appoint personnel to the key management post, power to do the decision making. And you can also acquire, you fall into the control definition if you are having rights or exposure to variable returns. The last category is combination of both power and variable returns. So if you do that, automatically your parent company is required to consolidate, and then you will fall into the definition of group. This is very relevant because if you in the context of distribution service center business, headquarter business, and IP business, this one leg of the transaction has to happen with foreign connected person. Who is foreign connected person? A connected person that is not a tax resident in UAE. Okay, so whoever is one entity is in UAE, one entity is not in UAE, but if they fall under the same group, then you will become a foreign connected person. So if you enter into a transaction, UAE entity is entered into a transaction, if they come under the definition of foreign connected person, okay, by virtue of ownership or control, and where you are required to prepare a consolidated financial statements, then that will become a relevant activity. Otherwise it will not become a relevant activity also. They've also defined what is consolidated financial statements. The financial statements of a group in which assets, liabilities, income, expenses, and cash flows of the ultimate parent company are presented as those of a single economic entity. Now let us look into few examples. So once you understand this, it becomes very easy. Assume that you are an entity in UAE, ABC, and you are doing purchasing a goods from XYZ in India. Okay, so the minute you are acquiring from a foreign connected person, just 1 second. Hello, hey, I'm in a meeting. sorry. So ABC is acquiring goods from XYZ. So automatically they are buying from a foreign connected person because XYZ India holds 55% shareholding in ABC. Assume that XYZ is controlling ABC by virtue of their shares and other stuff. So in that case, XYZ is required to consolidate ABC. So then this becomes these two entities will become a group. Obviously, these transactions will be covered by distribution service center business. Then ESR, it will become a relevant activity. Now look at the other example, similar example. ABC is buying from PQR, whereas PQR owns only 7% of ABC and they are not in a position to control. Okay. Just because ABC is buying from a related party, they are related party because you have a 7% shareholder, but they will not fall under the group because you are not required to you are not required to prepare a consolidated financial statements. In this case, although you are buying from a related party, this will not be a relevant activity for the purpose of distribution service center business because it is not a relevant activity at all. So this is not a distribution service center. This will not come under the distribution service center relevant activity. Similarly, let us look into another example. A parent company is in UAE. You are buying, you are providing services to your subsidiary in KSA. By virtue of a holding and subsidiary, holding company is controlling the subsidiary. You are required to consolidate. So when you are providing services to KSA company, so then this service will become a service center business and this will become a relevant activity. Similarly, you have an investment in UAE company as an investment in South Africa. By virtue of just investment, you are not required to consolidate. Even though you are providing services to South Africa, this will not become a relevant activity within the definition of service center business. So let us take another example. Okay. So IFRS 10 talks about parent company preparing consolidated financial statements if you are exercising control either through ownership or control, correct? In this case, XYZ company, ex Indian citizen owns 3 companies, one in India, another in UAE, another in China. Okay. All 3 different entities, but all are owned 100% by him. Okay. So there is a UAE company is buying goods from foreign connected person, which is Indian company. They are also selling or rendering services to China. Again, that is also a related entity. In these cases, actually speaking, although it is controlled by one single person, strictly by the definitions given, the regulations, you are not these entities are not required to prepare consolidated financial statements. Only X, if required, he can prepare a combination combined financials actually. So in this case, can they get away from these regulations is something which we need to look into it. So if you ask me, the entire regulations on ESR is based on the principle of BEPS Action Point 5, which talks about whether any harmful tax practices are happening, whether any profit shifting is happening artificially without having a substance. In this case, you can still shift your profits artificially without having a substance. So I take a conservative approach. Of course, it's my personal view. If any transactions happens here, since it is controlled directly by one individual, any transactions of this nature, it is better to report as relevant activity. Although strictly the regulations given is not applicable. Again, I'm going by substance over form because most of the regulations they're talking about substance over form. I think if there is a clarification given at a later stage, fine. Otherwise, if you look at really substance over form, in these cases also harmful tax practices can happen, and one can benefit, one can move the one can shift the profits from one country to here. So it's my view that we should be reporting this in the ESR purview. Now let us look into the changes in the relevant activities with the introduction of new regulations. So 9 relevant activities, there are no change, same remains. Why I circled distribution service center business? Because that captures close to 70% or 80% of UAE businesses. Again, I repeat this, not all business activities are relevant activities. For example, you are in the manufacturing, that is not a relevant activity. It has to be falling under one of these 9 categories. Again, many people say that I have only one transaction or only 100,000 we have done the business with, my foreign connected person. So they are not told any threshold, even a passive receipt of income, even 10,000, 20,000, 100,000, you will fall under these particular regulations. The change amendments have come with the new regulations in the distribution service center business, lease finance, holding company, intellectual property business. The rest of the cases like headquarter, shipping, banking, insurance, investment fund management business, no changes have come. So that's why I'll just cover these 4. Out of this, distribution service center business has been impacted the maximum because of the change in the definitions of connected and foreign connected person. Now let us get into distribution service center business. What is the significant amended provision? They said they remove purchasing from a foreign connected person component parts or materials for goods or goods ready for sale and reselling such component parts, materials or goods. They removed the word from the earlier definition, importing and storing in the UAE, that is removed. They also said that outside UAE, selling outside UAE only, earlier it was there. Now whether you sell inside and outside, both are covered actually. Second is providing services to foreign connected person. Earlier they said that in connection with a business outside UAE. Now regardless of the place of supply, everything will be coming under the scope of service center business. So with this, the high seas sales and all these things, clarification has come. Now only thing is, again you will have to look into whether you are purchasing from a foreign connected person within the definition of given over there. You have to be falling under a group where you are whereby you are required to consolidate the financial statements. Then only those transactions will come under either distribution or service center business. Otherwise, simply by doing a transaction, you will not come under that purview. Lease finance business, not much of changes. The word financing to connected persons has been added in the amended ESR, which is about your intra-group financing. They also said making loans to related or unrelated parties in UAE and outside UAE. So almost all kind of loans, if it is given for consideration, will be included in the lease finance business. They have also specifically included cash pool arrangements. Many big companies, whenever they have an excess cash, it has to get transferred to their treasury, and treasury at the end of periodical time intervals, they pass on certain benefits to the UAE entity. In such case, those cash pool arrangements also will come under the lease finance business. So in the lease finance, one is a lease, another is a finance. There are 2 terms involved into that. So let us look into this. So the lease finance business shall have the meaning as set out in the law governing such activity in the state. So which are all the regulations that are covering lease finance? So lease is covered by Federal Law number 8 of 2018, and finance is covered by Decretal Federal Law number 14 of 2018. Now let us look into Federal Law 8 of 2018, which is covering on the lease. So this law mandates the UAE Central Bank to regulate lease financing activity, and accordingly Central Bank shall issue its regulations or circulars to lease finance activities in the UAE. Okay, if you look at Federal Law number 8 of 28, Central Bank shall issue regulations for, as per Article 2 or 4. If you see, Central Bank shall issue regulations for the issuance of license to lessors and practicing finance lease business in the state, including license relating to foreign finance lease companies branches. So far, they have, to best of my knowledge, Central Bank has not issued the regulations. So it is yet to be issued. But as of today, whoever is into lease finance business, you report it. But as of now, Central Bank has not issued regulations. They also are supposed to come out with a register to register all your leases actually. But so far, even this cabinet has not announced this particular one. So these 2 aspects are still pending, to best of my knowledge. So as of today, at least earlier, what was the scenario? If a mainland company is doing a finance lease, there was no provision to report because Minister of Economy side did not have that particular relevant activity, because that relevant activity was coming under UAE Central Bank, and that was not available for the mainland companies wherever it is not licensed by the central bank. Second one is on the finance part, which is covered by Decretal Federal Law number 14 of 2018. Okay, where they said that this law highlights the activities that shall be considered as financial activities and are subject to central bank licensing and supervision. So today, whoever does financing activities are supposed to have license from the central bank. Okay, which I mean, funding includes all kind of credit facilities and all funding facilities, all types actually, including Sharia compliant funding facilities. If you look into it, this particular Federal Law 14 of 2018, they said that who are licensed financial institutions, they said banks as well as other financial institutions. Okay, licensed in accordance with the provisions of the Decretal Law to carry out a licensed financial activity. If you look at other financial institutions, they said any juridical person other than banks licensed in accordance with the provisions of the Decretal Law. So all the limited liability companies, mainland companies will fall under this other financial institution category if you are into a lending business, or if you are giving funding for consideration. So again, since to best of my knowledge, nobody has got this license other than banks and NBFCs. Again, now at least there is a window for you to report. Earlier, the Minister of Economy side did not have this particular relevant activity window. At least now, since Minister of Finance has come with one single portal, you are in a position to report. Again, you will have to see now what is your total income with your interest income. Assume that you are making, say, 10 million is your total income. Out of that, 9 million is going to be your interest income, and only 1 million is going to be your core business income. Then the license for which you have taken, okay, is not the right license. Probably central bank might look into those aspects. On the other hand, say, assume that out of 10 million total revenue, you are only making interest of 40,000 dirhams or 50,000 dirhams, okay, which is very insignificant, and you are managing your excess funds by way of giving to your group companies, or or to outsiders. Again, they will look into it. If you are funding to your own group companies, treatment may be different from you are lending to outside. So the minute you are into a lending business, that requires a license. So obviously, once we all file and they do the analysis of this data, they'll come to know who are all doing lending business. Probably accordingly, regulations might come or penalties might be announced. So licensed finance activities are covered in Article 65 of this particular Decretal Law, where they're saying the following activities shall be considered as financial activities subject to the license, which is providing credit facility to all types and providing finance facilities of all types, including Sharia compliant funding facilities. Holding company, not much of change, a little bit of a cosmetic change in the language. Earlier they said a holding company is a holding company in accordance with the law applicable to the licensee carrying out such activity. In fact, many jurisdictions have given a different type of a license. Somebody gives us a holding company activity. Some jurisdictions gives us investment in commercial enterprises like that. So that's why they removed. They said that look into substance over form. Okay, what is your activity? Whether if your activity's sole function is the acquisition and holding of shares and equitable interest in other companies, and you are only earning dividends and capital gains, then it will be like a holding company relevant activity. What does it mean? It means if you comply with the only reduced compliance requirements are there for them. You need to only satisfy two things. Okay, if you are complying the requirements to submit any document, records, or information to the relevant licensing authority in accordance with the law applicable to the licensing UAE, that is one condition. Second condition is you have an adequate employees and premises for holding and managing the holding company business. So holding company business per se don't require big time number of employees. Also, big amount of space for you to manage. It's not going to be that difficult to comply with this. They also mentioned that this is the only exception in all the relevant activities, saying that holding company need not be directed and managed in UAE. It can be even directed and managed outside UAE also. And you don't need to demonstrate adequate expenditure in the UAE. Practically, you don't need to spend anything on the expenses because the activity as such doesn't require any big spending. So in case you are not falling under the narrow definition of holding company, and by virtue of carrying out any other activity, or you are having any other instruments other than equity or equitable shares or equitable interest, then fully economic substance regulations will be applicable depending on which relevant activity you will be falling under. Otherwise, only reduced compliances. They also clarified in the guidance note saying that in case, okay, here I mentioned only shares and equitable interest. In case your balance sheet has got one real estate assets or an office space from where you are operating your holding company, that is good enough. Still, you will be considered as carrying on holding company relevant activity. IP is very simple. IP, they said that only if you have an identifiable separate income, then you will fall under the IP. So what are IP assets? Copyrights, patents, trademarks, brands, technical know-how. In case out of these you derive at say royalty, licensing fees, franchise fees, or by way of a selling, you gain some capital gains. In that case, if it is separately identifiable, okay, then it becomes an IP income. Many have IP assets sitting in the books which are very important for their business, or it may be supplementary to their main business. If you don't have a separately identifiable income, then there is no need to worry about it. You are not falling under IP business relevant activity. Only if you are receiving some income which are separately identifiable, then it is an IP relevant activity. Okay, there has been some change in the high risk IP. They've removed one particular category. Is they said that a licensee that owns a patent or a marketing intangible or similar asset, okay, is considered as carrying on high risk IP earlier. Now they said not necessary, provided in exceptional circumstances, you may, if you carrying on taking strategic decision managing the principal risk relating to development and subsequent exploitation of IP asset, acquisition by third parties and subsequent exploitation and protection of IP assets, and carrying on ancillary trading activities through which the IP assets are exploited, leading to the generation of revenue from third parties, then that is not a high risk IP, that is a normal IP they mentioned. And many have a doubt what is high risk IP and what is a normal IP. Okay, everything is normal IP except what is defined in the regulation as high risk IP. What is high risk IP? First of all, the licensee did not create the IP asset, okay, which it holds for the purpose of its business. You are basically either you acquired from your connected person, or you received from by way of a contributing to R&D to another person residing outside UAE. So it is not your own IP. You got it from your related party or connected person. Then subsequently, what you are doing, you are licensing or selling such IP assets to one or more connected parties. Otherwise, earn separately identifiable income from a foreign connected person. So, for example, you have an UAE entity. You don't have an IP with you. Your German entity is transferring you an IP here because Germany, there is a tax for the it's a tax country, so you are transferring here. From UAE, you are giving across the globe, Singapore, US, UK, Australia, you are receiving all royalties or IP income, whereas UAE, it is a tax-free income. In those countries, there's a tax, so when they're paying you a royalty or an IP income or IP expenses, they claim it as an expense. So there it is not taxed. Here also it's not taxed, double places it's not taxed. That's why it's a high risk IP. So this is how big companies were moving, profits to from high tax jurisdiction to either low tax jurisdiction or zero tax jurisdictions. That's why even as I mentioned earlier, It is a real challenge for even tax administrator to control this. That's why they said it's a high risk IP. What they all decided, OECD in the BEPS regulations also. Okay, both the countries will look into this particular data to see whether any harmful tax practices have taken place. So the minute you fall under high risk IP, automatically your information will be shared with the other country where you have a parent company or ultimate parent company or a UBO, and where in UAE also they'll be looking at with a magnifying glass, saying that what you are really doing on the IP as well. So as I mentioned, what does it mean? Automatically it will be shared with the foreign competent authority where your parent, ultimate parent UBO resides, and in addition to that, in UAE you will be subject to increased substance requirements. What they will be doing, so as I said, both the sides regulators will be looking into, and you will have to give a declaration as a licensee that you are not carrying on a high risk IP business. Second is increased substance requirements. So they will see that whether you are demonstrating historically and exercised a high degree of control over DEMPI functions, whether it's development, exploitation, maintenance, protection, and enhancement of your IP. Okay, by an adequate number of full-time employees with necessary qualifications who are permanently reside and perform the activities in the UAE. So they will look at closely the employee information, the type of contracts, what is their experience. They'll also look at your business plans and the reasons for owning the IP in UAE. They will also see where the decision making is taking place. Is it taking place in UAE or remotely it is being controlled from outside UAE. So the minute you are into high risk IP, I think you will have to go through tougher tests or tougher assessments. Otherwise, it's fine. So let us look into what are all the activities involve cross border. As I mentioned, foreign related parties, which is foreign connected persons, will come high risk headquarter business, distribution service center business, high risk IP business. Shipping business, of course, it has to be operated in international waters. Other categories, banking, insurance, investment fund, already it's been regulated. I don't think they will have an issue because they are prepared for it. Holding company business is a reduced substance. Intellectual property business other than IP is also, unless you have a separately identifiable income, there is no issue. Lease finance business, okay, NBFCs are currently regulated. Others, leases and fund, financing to related and unrelated parties are currently unregulated. Probably this is where we'll have to be a bit careful. And this is where the new definitions have given a big clarity. And here they will comply it very easily. So let us look into the flow chart given by the Minister of Finance. So this is very important to understand. First, is the licensee a corporate body or a partnership in the UAE? If you say yes only, you'll have to go to the next. If you say no, economic substance regulations does not apply. So first you will have to see whether you are falling in the definition of licensee itself. Then within, if you are a licensee, then we'll have to look into, does the licensee conduct a relevant activity? If you are not conducting the relevant activity within the definition of ESR regulations, then ES regulations will not apply. You don't need to even file notification also. So ministry has repeatedly said, so you don't need to file notification. If you are carrying out a relevant activity, you go and test whether you are exempt, you fall under one of the 4 exempted category. If you fall under one of the 4 exempted category, you file notification as well as you give along with the notification supporting evidence to substantiate the exemption, so that with that you don't need to undergo the economic substance test or file the report also. Other cases you will have to next you will have to see whether you are earning any income from relevant activity. Okay, you are conducting a relevant activity but you are not earning a income from relevant activity, then notification alone will be good enough. You don't need to go through the test. So all the other cases has to go through the test. For example, you are a holding company in this case. Okay, you have invested into a couple of equity and equitable interest, but whereas you during that year you are not received any dividend. So you will be falling under the holding company relevant activity, whereas you are not receiving any income, so you will not be subject to report or any test section. Now, the third section is amendments in the governance, disclosure, and penalties. As I mentioned, FTA has been appointed as a national assessing authority. They got more powers. Now they will undertake the assessments and determine whether you have, the licensees have complied with the test or not. They have powers to impose administrative penalties. They will hear and decide on the appeals. They will exchange information to the Minister of Finance. So in summary, if you see, once a licensee files a notification or report, regulatory authority basically does more of an administrative function now. But with the Minister of Finance portal is live, they don't even collect and review the accuracy of the notification. I don't know how this will be done. We'll have to see what is the role of regulatory authority. Probably, if competent authority wants something, they will ask FTA. FTA will ask in turn regulatory authority, because license is issued by this regulatory authority, so they will have more easy access to the licensee. Then National Assessing Authority, as I mentioned, they will do all the assessment and impose penalties. Okay, they will notify the Minister of Finance if the licensee fails ESR test, and if you are carrying on the high risk IP, as I told, because that has to be automatically exchanged with other governments. And in exemption category, you are saying that I'm a tax resident outside UAE and I'm a branch of a foreign entity subject to tax outside UAE. This information also will be shared with Minister of Finance. Minister of Finance automatically exchange this information. Okay, where when you fail the test, or you are carrying on a high risk IP, or in these two cases you are a tax resident outside UAE and you are a branch of a foreign entity and claims to be subject to tax in the foreign jurisdiction. In these cases, they will also share the information with the parent company or ultimate parent company, ultimate beneficial shareholder, their respective foreign competent authority. Both the Minister of Finance will exchange information, so that whatever you give, that also get authenticated by the other side of it. So there has been some changes in the definitions of relevant or a gross income. What they said is a gross income appearing into books of accounts under the applicable accounting standards without deducting any type of a cost or an expenditure. And it doesn't matter whether you arrive at profit or a loss at the end. So it has to be at a gross revenue level. Many people ask me saying that I am not showing it as an income. Okay. Basically, I have an expenses that gets reimbursed by my head office. So the same expense head, I am writing that. So I don't have an income. Whatever is the expense at the end of the year, it gets nullified. See, accounting wise, debit, credit, you can do anything, but they will look at the nature of the transaction. Second thing is, especially in the IP, okay, many people don't show it as a royalty or don't show it as a a trademark income or whatever it may be. They just show it as miscellaneous income. You may change the nomenclature in your trial balance, but that doesn't get you away from the particular relevant activity. So keep in mind, so those things will be taken very seriously if you want to, show wrong information or a misleading information. So notification, they said that within 6 months from the end of financial year, you will have to file, and report within 12 months from the end of financial year. The new addition is you will have to add financial statements along with the report. In case in the notification you are availing the exemption, at that stage, those exempted entities also have to file financial statements. They have not mentioned about whether audited financial statements are unaudited, but in the report, economic substance report, they are asking one question, whether your financial statements are audited or not audited. Obviously, the minute you say that they're audited, it will have a more weightage than which is not unaudited. What happens, entities that are undergoing liquidation, they said during the course of liquidation also, all the compliances will be applicable for that particular relevant period. Notification, as I said, those who are not carrying on the relevant activities will not be applicable, no need to file. And branches registered in the UAE are regarded as an extension of their parent or head office and are not considered to have a separate legal personality. That has been very clarified. That's why exemption status also has been given. So parent and head office registered in the UAE must file a single license. Suppose you have a branch head office, everything is within UAE. You don't need to file multiple returns. One composite return or one composite notification is good enough. Let us look into some examples. Suppose parent company is in Abu Dhabi. You have a branch in mainland Dubai, and you have a branch mainland in Ras Al Khaimah. If you file at this level, one composite notification report, that is good enough. Now let us take another example. Why I given that another example is here. If you see here DED, here DED, here DED, they are the regulatory authorities. They all come under Ministry of Economy. Whereas if you are here in this example, if you see parent company is in Abu Dhabi and branch is in Dubai, which is also mainland. This is also mainland, but this has a branch in Jebel Ali also. Although these two comes under Ministry of Economy, this comes under Jebel Ali free zone, but they clarified saying that one single notification at this level is good enough. Even these branches, you only report when they are carrying out the relevant activity. If they are not carrying out the relevant activity, there is no need to report. So the report, as I mentioned, within 12 months from the end of financial year, and in the return, I think only the financial statements are new, rest all same only. Some key administrative changes which has come is you will have to maintain 6 years, the records you have to retain for 6 years. So within which they'll have to finish the assessment. And they also given one more important thing. They said all ministries and government authorities, whether federal or local, shall provide and cooperate with the regulatory authorities, national assessing authority and competent authority with respect to any date of the licensee or which is in their possession, or if they want to do any identify their business premises. If they want any help on the licensee, they can approach any of those governments. There is no confidentiality involved in that, so they need to cooperate. There has been some changes in the penalties have gone up, and there is no change in the substance test, but it is very important to understand the substance test. Quickly I'll run substance test for 10 minutes. So there are 3 tests you will have to the licensee has to meet to say that the you are carrying out the relevant activities in UAE. So one is the licensee shall conduct a core income generating activity within the UAE. The relevant activity are being directed and managed in the UAE. The licensee having regard to the level of relevant activity shall meet the adequacy test. If you comply with these tests, these 3 tests, you are passed in the economic substance test, whereby you are complying with the economic substance regulations. What is SIGA? They have given an indicative list, but they mentioned it very clearly. This is only indicative, it's not exhaustive. And for each business, you can define your own SIGAs. So non-SIGAs are those which are support or back office functions like IT, audit, or HR, and all those things will come under non-SIGAs. So what they said is SIGAs are those activities that are of central importance to the licensee for the generation of gross income earned from its relevant activity. So what is very, very centrally important to your generation of revenues is what is called SIGA, and you define your own SIGAs. Director managed the second test. What they said is this is very, very important to prove that the decisions are taken here. This is business is being managed here. The licensee board of directors meet at an adequate frequency as needed for the decision making. Again, they said adequacy depends on the level of relevant activity. Whether you conduct 1 meeting, 4 meetings, 8 meetings, you prove it. What is adequate? There is a quorum of directors physically present in the UAE. So again, quorum is as per your licensing issuing documents or articles of association or both. So this is where when we were looking at it, I saw that different jurisdictions have got different quorums. Some they are not even mentioned in the articles about quorum. But irrespective, if it is mentioned, you go by that. Otherwise, you take best practices in the globe. Globally, if you see 50% is a good quorum, that's a simple majority. But one important thing is quorum should be physically present in the UAE whenever the board meeting takes place. So that you have to keep in mind. So minutes of the meeting recorded and signed by the directors attending the meeting. Minutes must be signed by the directors physically present in the UAE. And minutes of the board meeting shall record the strategic decisions at the meeting. Again, what is strategic decisions? Having regard to the nature and size of the business. Okay, the management and board would know well what to figure out what are the key decisions. Okay, which could range from your price negotiations, your partner finalizations, your delivery schedules, or any decisions that will directly have a material impact on your revenues. Okay, which will be a strategic decision in my view. And they also mentioning that board should have necessary knowledge and expertise to discharge the duties of the board. So revisit your board composition, their qualifications, their experience, and the minutes of the board of director meetings shall be kept in the UAE. This is not difficult to comply with that. And they also mentioned in the guidance saying that this test, manager and director test does not prescribe that board members to be resident in the UAE. Okay, rather the board members are required to be physically present when taking a strategic decision. So you always look at what is your strategic decision. When the board is present here, try to take strategic decisions in those meetings. And article 6 of 6.4 of the regulation 57/2020 also provided very important provision. They said that in the event that the licensee is managed by shareholders, owners, partners, or an individual manager, either general manager or a CEO, or more than one manager, the above requirements what is applicable to the directors will apply to such person to the fullest extent possible, as good as they'll be treated like a directors. So if many big companies, if you see, you have a chart of authority where you are delegating the powers. Big companies, the board cannot be traveling all the time, or they'll be present everywhere. That's why you have they delegate by way of chart of authority powers to these people. So if these people meet regularly and take all these decisions and comply with these requirements, those are good enough. And some points to consider now: qualified director should be should not be for namesake, should be trustworthy. Not namesake, should have qualifications actually. And try to put board which are more local than the global, so that when taking strategic decisions they can be present here. Quorum shall be determined in accordance with the law applicable to the licensee or set out in the constitution documents or both. So please revisit your articles and make an appropriate amendments to mirror the requirements of these particular regulations, and document the policies, procedure, chart of authority, and get it approved by the board of directors. Many may be having, but these are not adopted by any previous board of directors meeting. Get it adopted or get it ratified, so that you will have a legally you will be complying with that. Proper minutes has to be kept here. Okay. In considering the COVID-19, they also said that okay, they have not said that don't comply with this test. They said that during the period of COVID, you can appoint alternate directors who are present in the UAE to attend the meeting. Again, they said that this particular alternative directors relaxation is only given during the COVID phase itself. So still, since it is continuing, say between say March, April onwards up to December, or until whichever time it goes, you have this concept of alternative directors also. And they said that all the CIGAs need not be done by you. It can be even outsourced to a third-party service provider, provided okay, you are in a position to monitor, control, and demonstrate adequate supervision of the SIGA that you are outsourcing. It means, what it means is, you cannot outsource the direct and managed test actually. So this test has to be done by you. You cannot outsource that. Okay, you need to have an oversight and control of the relevant activity. Okay, such outsourcing activity must be conducted in UAE. I am talking about only SIGAs. Non-SIGAs can be outsourced anywhere. The employees' expenditure and physical assets of the outsourcing provider should also be adequate in respect of the SIGA. Okay, in the economic substance of the service providers will not be counted multiple times by multiple licenses when evidencing complaints with the economic substance test. In other words, they're saying, okay, don't play around with that, and same company use it elsewhere also to circumvent the test. Because if you see in the report, they're asking a lot of information about the outsourcing party also. They're also asking whether your company and outsourcing company are having the same address or not. So they're going to check all those things actually. And when you provide and other licenses also provide about the same outsourcing entity, then they will look at the number of employees, how many are utilized in each company and all. They will do the cross tally also. Adequacy test, they said that a licensee with regard to the level of relevant activity should have adequate number of employees, adequate operating expenses, adequate assets in the UAE. Okay, again, employees, it's not necessary that they should be in your visa. Okay, they can be employed by you, or it can be in another entity. It can be a temporary or a long-term contracts, but whoever you are utilizing have some kind of an agreements in place. What they're saying is, okay, in the guidance note, they've cleared that they mentioned saying that adequacy can differ from business to business depending on the size. Okay, they are not telling you to, go and spend on these things. What is adequate is good enough. You just maintain sufficient record to demonstrate that you have an adequacy, so that tomorrow National Assessing Authority might review such records and supporting documents, okay, during the assessment to assess the adequacy and appropriateness to the level of your business also. So some points you need to consider is have job descriptions and tasks relating to SIGA. So you need to map SIGA with your key employees, and you need to maintain books to record the operating expenses as well as the assets. Okay, and also have some kind of a comparison with the peers actually. Okay, it should not happen that you are incurring 100,000 for a particular task, whereas the whole industry is incurring say 1 million actually. So that might so use common sense and use prudence this thing to see that you are also at par with the industry in terms of spending, assets and all this stuff actually. Okay, again, you need to have a reasonable office spaces to prove the substance. Going forward, this flexi desk, virtual offices and all this going to be difficult. Again, they have given in the frequently asked questions saying that you take a pragmatic approach when performing economic substance test, considering the type, size, nature and level of activity and the level of income earned by the licensees. Okay, so this adequacy is not generic. It might change from industry to industry, business to business, size of the business, everything. So you need to be using the prudence and the common sense to see whether this is adequate enough. So again, if you look at to qualify the economic test, these three, SIGA in UAE, direct and managed in UAE and adequacy in UAE, they are intertwined each other. They'll be anything you see, first is the more than SIGA, they will see everything that you do is a SIGA actually, whatever gives you revenue. You see how you are directing and managing all these SIGAs in UAE. Or it should not happen that all these activities are remotely controlled from UK or in India. So this is where very important. These are direct and managed in UAE. And again, it is not that only direct and managed in UAE without having any employees or any expenses or an asset. So you need to have adequate one. Okay, adequate employees, adequate expenses, adequate premises and assets to conduct the activity in UAE. So in such case, okay, whatever profits, whatever revenue you are showing, they will come to know that you have a proper substance is there. It is not just only booking revenues. You have a substance in carrying out the business in the UAE. So this is what about the test, and I think I'll have to go through the notification and from report and UBO. Anurag will take into notification. So they asked the basic details about licensee, and they're asking whether so if they're asking about the primary licensing issue authority, and they're asking if you have a dual license. In some companies have got both trading also and service also within same license, or some people may be having branch in a different jurisdiction. For example, as I told you, one is Abu Dhabi company, a branch could be in Jebel Ali. So probably you'll have to say that you have different licenses. Then legal name as per the constitutional document. Then they're also asking, is the licensee register for VAT in UAE? So since FTA is going to be the National Assessing Authority, you, before giving the figures, you try to, also do a reconciliation, cross check your revenues as per VAT and ESR also. And they are asking about the branch details. So branches where relevant activities are not carried out need not be disclosed in this section. Only whoever is carrying out the relevant activity only, you'll have to mention this section. And they have given about the reportable period. Some examples have been given. So you all may be aware, the regulations are applicable for the financial years commencing on or after 1st January 2019. So many companies, those are incorporated in October 2018, okay, they can take 15 months or 18 months to close the first year. For them, this whole ESR regulations may not be applicable for this year. Maybe for the second year or next year, it can be applicable as well. So some examples are being given. And the relevant activity details, they're asking, okay, you fall under which relevant activity? Then they're asking, okay, did you, earn any income during the relevant period? Okay, are you subject to tax outside? Okay, who is your regulatory authority? They're asking. If you are claiming an exemption, okay, in the category of you are a UAE resident company, or you are 100% owned by UAE nationals, not part of a MNE group. In such case, to claim exemption, you will have to provide a shareholder register, your structure chart, proof of nationality and residence visa copies, passport copies, as well as copy of financial statements for the relevant period also. Similarly, if you are claiming exemption for investment fund, you'll have to give some documents required for the investment fund. Similarly, if it is a SPV or a holding company of the investment fund also, you need to give the structure chart as well as evidence of investment fund status. If the licensee is subject to tax outside, then you have to provide your tax identification number in the country where you are claiming to be taxed, and TRC from that country, taxation certificate, and could be your copy of assessment to income tax or a corporate income tax demand. You need to prove evidence showing that yes, you are being taxed in the other country. If you are a foreign branch of a foreign company, again here also you'll have to provide the details to identify yourself, saying that you are being taxed in that country. So for that, many times what happens is, since you are a branch, you are getting consolidated in that particular country. Separately, it will not be there. At the consolidated level, it will be there. So in such cases, probably you'll have to provide some evidence saying that this income is being clubbed over there. Plus, currently, if you see in India, okay, April 2019 to March 2020, they've extended submission of returns up to 31st January 2021 actually. So still they have not filed. In those cases, you will not be in a position to provide. Probably you can provide the previous year's one, and you can also give the circular issued by the income tax department, and also you can say that you will be filing the return before January also. Parent company, ultimate parent company, UBO details will be only activated provided you are into high risk IP. Otherwise, this information is not required at the notification stage. Again, UBO should be in line with the recent regulations on real beneficiary regulations, which my fellow speaker will cover now. Again, this whatever you may be filing now is as of today, but this UBO information you will have to provide as applicable for the relevant period, which is 2019. Declaration, you will have to provide some authorized person whereby FTA can contact in relation to any of this notification. So provide somebody who is a general manager or a director or a compliance officer, or somebody who should be permanent in nature, so that people may change, but at least FTA should be in a position to contact them. With this, I conclude my presentation. I hand over to my next speaker.
Thank you, Anman sir, for such a good session. You have shared much more insights in relation to that. So what I will be covering is a little bit more detailed about the questions and what we have experienced so far with respect to the economic substance regulations and key questions that a lot of members have. So let me just set this up. Yeah, it's not here. Okay. And in case somebody has a question in the middle, they can always ask me and stop me if I'm going a little fast about it. So what I'll be covering now, I'll be covering key things about notification, reporting and substance tests, and certain do's and don'ts which we have come across during our course of interaction with some of our clients. So if I say about economic substance regulation, what is really important here to understand is relationship. The most important factor in today's time and in today's regulation, which redefined the ESR, is talks about relationship and the relationship that they have brought it from CBCR. So effectively, if you see the global definition contained within the CBCR is what they replicated here. So therefore, it's important to understand that how the business relationship within the UAE with the foreign connected person is there. And the foreign connected person, which is the key element of economic substance regulation, only applies if that relationship got established. So important thing is that that relationship is very critical. As Hanmanzar said that to file the notification and the return, you have to go and create on the Ministry of Finance portal. You need to create an ID. Once you create an ID, you get the confirmation from them, and basis those login details, you basically log in. And what is the important thing that they're asking in the notification is about your license details, your branch details, your reportable period, your relevant activities, and declaration. Now, one thing that we experience is that many times we have confusion as to what shall be notified to authorities, especially when there are multiple activities involved into it. So the multiple activities can have multiple combinations built into that. And there's a concept of primary as well as the ancillary activity. So it's important for you to understand that what is your primary activity? Does it fall within the duplicate reporting angle? Then in that case, you need to just notify about your principal activity, because ancillary become part of it. I'll cover what is the primary and what is the ancillary activity. Another key aspect about notification is that once you submit your notification, it's not that it's just done. You have another chance to modify and review your information which you submitted on the ESR notification while you submit the return. So that is the facility also they have given. And many times once you submit your notification, you have an option to submit an amendment. Don't do that amendment. Do not submit that amendment, because for this year, what the Ministry of Finance said that you need not to submit an amendment request if you have missed to incorporate certain things or you mistyped certain information. You can update those particular things into the report once you submit the report. Here are certain critical things in with respect to notification. You need to understand dual license, relevant activity, exemptions, ownership, M&E group, the important aspect here. So I'll talk about the dual license. What is this dual license? Many times people get confused about dual license. So dual license is if you see one of the entity which is having a commercial license, at the same time they also got an industrial license, right? So those is considered to be a dual license. And the important condition with respect to dual license is the authority of issuance of or regulator, I must say, with those license should be separate. So it could be an example is that industrial license or security and commodity authority probably have issued the license with respect to certain management of the securities if they have. Another key aspect about relevant activity is what to notify in case of multiple. We'll touch base on that. Exemptions, are you an exempt licensee? How about your ownership, parent, UPC, UBO, M&E group, law versus the form guidance? So there is a slight deviation while you submit the form, and when you read the guidance available on the notification form, the definition of M&E versus multinational group is different, both the forms. So what you should consider. So if I see the dual license, what means dual license means it shall be from two different regulatory authority. So it should not be the same, because many times if you see within the UAE, if you are having a license, let's say for a professional management consultancy, and tomorrow you want an audit license, what is going to happen, since both the activity fall in different groups, a particular business will get two licenses. So that dual license does not mean those two licenses. The two licenses means that an organization is governed by two different regulators, which could be industrial license and commercial license, or could be a security license from other regulator, or could be Ministry of Health license. There can be multiple things. Does not mean two licenses from same different authority, different activity. Purpose shall be different of the license. That is important here to consider. The dual license means this. A relevant activity, what shall be notified together? The question here is very good. I must compliment the Ministry of Finance and the team that they come up with the duplicate reporting. They avoided the duplicate reporting. And here is some of the example. So let's say a business which perform the headquarter activity, distribution and service center activity, or lease finance. So where exactly you should report your entire relevant income from the activities itself. So the question comes in, we need to perform a test, what is the primary and what is the ancillary activity? And shall you notify all, or you do the primary in relation to that? So if you look into the definition of headquarters, so headquarters says that, provision of the senior management, looking into the business as a whole and taking and performing the activities which is of significant managerial control. Now, if I do a business where I'm just providing a headquarter service and all the key decision making happens with respect to the headquarter on that particular business with my FCP. All right. Now, in that case, when I say how it will be possible for a business to differentiate that I provide a CFO who's taking a strategic decision making, where at the same time I have a centralized IT function, they are providing the service with respect to the technology, or I have a shared services where I'm performing the services with respect to my human resource, or maybe a legal, or maybe something else. Now, how do you differentiate that HQ versus service center? And then besides, as a strategic, headquarter, I also give my FCP a loan, because I don't want to take a debt burden. So I further given them a loan, and I said that, look, you need to repay me the interest. All these three scenarios, if you look together, it falls within the definition of strategic direction that a senior management is providing to the FCP. Now, does that mean that I need to do three different reportings, or shall I do single reporting itself in that case? So what the law says that if you have multiple activities, identify your primary activity and then report the entire relevant income from those relevant activities under that particular head, and you need not to substantiate the substance for individually for those activities, right? So here what I say, that if you are predominantly performing the headquarters service, you need not to file the reporting with respect to lease finance, service center. You can simply say that I'm providing the headquarters service. Similarly, it goes with the insurance, lease finance and service center. What is your primary and ancillary activity? You need to identify that and do the reporting accordingly. Banking business. Banking cannot survive without the lease finance, without the financing basically. So if I remove the lease and financing together, it cannot survive. And service center is again a very, very collaborative part of it, because many times some of the banks, they provide the central function from the UAE itself to other branches, or maybe to headquarters. And then maybe. So what is your primary activity? Again, you need to look into that and then substantiate the entire income from all the relationship that you have with the FCP and into the primary activity. So here is what the reporting metrics look like. So you have the primary activity one side on the banking, insurance, fund management, lease finance, IP and shipping, where you may have ancillary activity, which could be lease finance, headquarter and service center and distribution. So if you see essentially here IP and shipping, they say that lease finance cannot be a ancillary activity. It has to be a separate activity. The headquarter, IP and shipping cannot go together. That's why you identify them separately. Only service center distribution and IP shipping could be IP and shipping. I mean to say two separate activity. So it could be IP, HQ and service center together. Then in that case you need to see IP headquarter, service center is integral part of it. If you're doing lease finance and you're doing headquarter and service center, then probably if your lease finance is an integral or primary function, then you need to report headquarter and service center. Need not to report basically. Coming back to the another point in the notification is exemption. So many times if you see that one thing about ownership tab, many people ask the question about what is the ownership tab and when it actually appeared. So if you click the exemption on the notification form, that's where the ownership tab comes in picture. And you need to define the criteria and you need to attach the relevant document when you claim the exemption. So I'm not going to go into definition, but key points is that what you need to identify is that wholly owned UAE enterprise, M&E group, and keep your UBO details ready if you're going for it. If I look into the ownership details, there are three layers. The first being is parent entity. Parent entity and ultimate parent entity, there are difference. So parent entity being who exercise the control. Now I have a very classic case, which Hanuman sir also touched base, but I will slightly say on that side of things. So I have a case where an organization is there which is in free zone. It is hold 50% by a foreign entity and 50% owned by another foreign entity. So first part of the foreign entity owned by 25% and 12%, 12.5%, 12.5% by three people, whereas other foreign entity holds steadily 50%. And they do all the transactions together with all these FCPs outside. So I asked the question to the business. I said, how do I establish your relationship? Do you have a parent entity? The answer was, I don't know. I said, how do you know? How do you don't know about the parent entity? He says, whenever there's any decision making happens, both the parties get involved. So it is not possible for a business to take a decision that A take a decision or B take a decision. It has to be A and B together. So I could not define that there is any parent. He says there is no any parent. I mean, ultimately they are the person together. So I said exercise number one, the parent entity. I don't have any parent entity. Now let's go into the second criteria, which is ultimate parent entity. So ultimate parent entity, the key criteria with respect to UPE is basically is who prepares the financial statement, consolidated financial statement. Now, when I look into the entire definition again, they say, look, none of these two parties, which is A and B holding 50%, makes a consolidated financial statement. Now, the second test is also failed with respect to that. Now, do I fall within the definition of exempt licensing? I say, as per the law very clear and very concise with respect to the definition of foreign connected person. They say foreign connected person is that person which is a part of an M&E group. An M&E group definition, they say that who is required to prepare the consolidated financial statement under the IFRS. So if I'm not required to prepare the consolidated financial statement, I will say that you fall within the definition of exempt licensee. And that's where you need to come and define your UBO, who is an individual owning more than 25% or above share capital of the business. So you identify any individual, a natural person who owns more than 25% and above of the business and submit the details. Now, here is an important question that you need to go into the very deep dive of the business. You need to understand that how they structure the entire organization and then take a call with respect to whether it's exempt licensee or not. So you need to perform the test at each stage in that relation. If I need to talk about ultimate beneficial owner of the business, how shall we determine? So there are three layers within the definition itself. The first being ownership test that I need to perform, which is pretty straightforward, that somebody owns more than 25% of share capital. And if that person is actual owner, I need to define that. But if we look into the UAE landscape, most of the, I mean, all the mainland entities having 51 and 49 structure. So the first test, I cannot fulfill that because there's an ambiguity. Ultimately, who the person on the share, on the trade license and memorandum is not actually the ultimate beneficial owner of the business because of side agreement, because of multiple framework. That is what is also laid out in Cabinet Resolution number 58 of 2020 regarding the beneficial ownership procedures. So they say that if you are not able to identify the UBO by performing the test number 1, which is ownership test, go to the test number 2 and perform the test and say that who has the control over the business. So when I say control over the business, controls means the voting rights. If you have defined the voting rights with respect to the business and say somebody holds 51% and somebody holds 49%, but the 51% does not have the voting rights or may have a very limited voting right with respect to say on the business. Then I say like whoever have a majority or controlling voting right on the business shall be the ultimate beneficial ownership. But if you say that since there is no class of the shares can be identified and defined within the Department of Economic Development, there is no multiple class of the share that you maintain. That's why I cannot go on the test number 2 as well. I cannot find the real beneficial owner. Then I go on test number 3, which is the management test. Management test says that the person who is in charge of the operation and control operation of the business and who take majority of strategic decisions within the business will be ultimate beneficial owner. So you take all the either of the 3 tests and define the ultimate beneficial owner and then submit the declaration with respect to that, right? So that is one of the things. Now, what with respect to the ownership threshold, which is 25% and above, what you are required to do with respect to your filing of UBO. I mean, there is no specific deadline that has been mentioned, and there is no fine have been announced until now that if you are not able to submit, because the challenge is that within the entire regulators, all the regulators are not very clear as to what they shall collect. If you see that certain emirates, they're collecting the information only if you are a part of MNE group and you are you have one of your shareholders a corporate shareholder which is outside UAE. They said then only I'll require your information. Otherwise, I'm not requiring this particular information because the licensee detail which you are coming to submit is anyway with us. Some of the regulators have the form wherein you can go and submit the declaration. They ask number of information besides what is mentioned in the law. And with respect to mainland entities, especially in Dubai, the DED of Dubai, they have announced that all the centers of DED centers are accepting the UBO declaration with all the legitimate required documents by paying a fee of 25 dirhams. With respect to Abu Dhabi, again the DED is not very clear, and it's again a very very chaotic situation, and that's the reason the regulator says that there is no particular fine, and should we require any specific information, we'll reach out to you. That's what the clear answer. However, what you are required, considering it's a cabinet resolution, therefore you must adhere and you must maintain certain documentation with respect to the UBO declaration. You should have in that in Arabic. Maintain the register of UBO. Now, a lot of people are not clear what do you mean by register. Shall we take a physical register or shall we do it electronically, maintain it? Ultimately, what the register of UBO means, that person who is in charge of the business, and how do you take the test. So you need to have a documentary and evidence defining the ultimate beneficial ownership following either of the test which is applicable to your business. And basis that, you need to maintain a register which is name, number of shares that they have, value of the share that they have, and so on and so forth, multiple details. The list of other entities owned, controlled by UBO, that is again a critical point, important point here in this relation as well, that you need to maintain other entities details with respect to the UBO as well, which other entities where they have stake. Register of nominee directors and managers, because you may have either of them as UBO considering the management test that you perform, and register of partner shareholder who are may not be the ultimate beneficial owners of the business, but they could be influential person into the business, and that's why you are required to make these details. Just give me a second. I just need to put my charger. Okay. So what are the documents required when we file the exemptions with respect to UAE businesses? You require the shareholder register, which I anyway explained to you, cabinet resolution number 58. What does it mean? Residency document, which is passport, visa, Emirates ID, and other stuff, documents. Group structure is important, that how and what your group structure look like. Is there any foreign relationship that exists? It's important to find, is there any specific document, a specific foreign entity that exists. They wanted to ensure that you are not part of MNE group, which could be a subsidiary, parent entity, or a sister concern, where exactly the relationship can be established. Then the management account. When I say management account, because they say that standalone financials are required, but this year, Ministry of Finance clarified that if you are not maintaining your audited financial statements standalone, you may be required to submit the management account. You can submit the management account. So important consideration here that you should definitely check your foreign connected person relationship as part of MNE group in order to claim, before you claim the exemption. Document needed for investment funds. If you're claiming yourself to be an investment fund license is required, information memorandum is required, other document which could be statutory in nature issued by authority to you. Now, important and critical thing here that your investment fund license should be outside the UAE. So we have a classic case, and many times people understand what this exemption is all about with respect to investment fund. So I have a business which is a global conglomerate, and they have a tree structure. Tree structure means that at the operational level, they may have like 60 or 70 odd entities in different countries. Then a layer on top of that, which may be like, controlling entities with respect to respective segment. Then those controlling entities go regional wise. So maybe like, they divided 6 into 6 continents. So then they cluster. And then on top of that, they come with like families, and then family on top of that comes a trust. Now they wanted to set up the entire fund in order to have effective tax planning and things. So what they did is basically they sold some of the businesses to a fund. So fund acquired all those businesses and issued the unit, which is again holded by the business. Now that fund is managed by a party, a specific investment fund. So this person is basically the unit holder, and the fund is managed by some other party. That is where they are saying that, investment fund, if you hold an investment fund which is managed by somebody else, then you are exempt licensee, because then the person who's managing your fund will be fall within the relevant activity. So he need to do that. Steps for correction. So if you file incorrect notification, do not worry about it. Do not go for submit amendment. Notification information is copied automatically to your report form. All these things comes in. You can edit either of the information each section and give the reasons. So all the sections are there in report form. You can edit any of the information which may be falsified in notification and give the reason. You can add, remove activities as well. So if you have chosen multiple activities and because of duplicate reporting, you probably need not to do that. So you can go and remove those activities. The important thing to consider here that once you update the things, there is a section D. You must update the section D by mentioning all the changes with the reasons. This is important aspect. Directed and managed in the UAE, important thing while submit a report. The number of board meeting held during the reportable period. There is no number defined. One meeting can suffice 2 meetings may not suffice depending on your size and nature of the business. So there is no definitive number with respect to that. Like for example, if I give the example of ICAI Abu Dhabi chapter, probably like if I say that look, by any virtue of the hypothetically, if there is a relationship exists between ICAI Abu Dhabi chapter and ICAI India, and there is a fund flow or there is let's say certain services out there, I may say that one board meeting cannot suffice for a not-for-profit organization which has multiple relationship outside, because the course of affair are day to day, and there are multiple stakeholders are involved. So in that case, probably your number of one meeting may not suffice in a year. So you need to see that. I mean, I quoted the example of ICI Abu Dhabi because we all are familiar that what kind of work that we are doing. Number two, number of board meeting held during the reportable period inside the UAE. So when I say inside the UAE, it means that people, your actual board of directors shall be available within the UAE to take the decision. And important thing is that we all were all strategic decisions made during the meeting held inside the UAE. So did you take in all the strategic decisions during the board of directors meeting that is held within the UAE? Many of the time people make the mistake here. They say that yes, I have board meeting happened here in the UAE. I have certain number of meeting held within the UAE as well out of that. And all strategic decision making happened inside the UAE. That may not be the correct statement. So you need to check that if you have a global board of directors, may not that all decision making critically strategic decision happens in the UAE. Maybe some of the meetings can happen outside and some of the decision can be taken outside. The reason why I'm saying that you need to be careful because you need to have a corroborative evidences with respect to that, with respect to all these things. So until now, I mean, since we are chartered accountants, we all understand that in India, you probably have done the Companies Act audit, where there's a company secretary and who managed to do all these board resolutions, the minutes, the quorum document with respect to the defined criteria, right? So most of the businesses are not doing those. They believe that it's very straightforward. Nobody's putting any attention to it. But remember one thing, the direct and managed test is critical for adequacy of the substance within the UAE. This is one of the very important segment. Therefore, you must place caution while you are creating the corroborative evidences with respect to direct and managed tests. Does the board of directors have necessary knowledge and expertise to discharge their duties? So until now, quite a few businesses where I see that board of directors have the multitude knowledge and experience, versatile experience based on the role that have been assigned. Otherwise, it's basically the businesses that have been is basically looked into that entire situation. Now, if I look into the key questions, how to show revenue from a relevant activity, most of the people have this question that I have identified the relevant activity, that I'm taking headquarter as an activity, or I'm taking lease finance as an activity, or probably I'm in insurance business or I'm in banking business. How shall I define the income from a relevant activity? Because until now I was not segregating it in my profit and loss account. So what the income here means, income means what is appearing in your profit and loss account as per accounting entries reflected in the ledger of FCP, the foreign connected person. So whatever the intercompany transactions that you have done within the FCP ledger, which is hitting your revenue, is basically your revenue from the relevant activity. If there is no markup on the price, then the amount recharged to FCP will be considered as income from relevant activity. And what should be the amount if let's say there's certain things which may be taxable because of might be various reasons. So does the amount should be exclusive of VAT or the service tax or the withholding tax? Yes, the amount should be excluding of the tax or including the withholding tax, because withholding tax is a tax that have been levied on top of the income. So it should be inclusive of withholding tax and exclusive of indirect tax. Does advance receipt fall within the income? Yes, if you receive an advance and which is being credited to the sales account, which is part pertaining to the income earned during the year, yes, that you should take it into consideration. Accrued income definitely should be included into that. Now come to So revenue is pretty easy. I consider it bit easy. However, how to identify the expenses from the relevant activity? So directly attributable and identified costs in relation to income of the relevant activity are basically those expenses which you shall report. The COGS in case of distribution activity, but eventually in case of distribution and other businesses, the COGS will not going to come in. Then we talk about operating expenses, which is indirect expenses, which cannot be attributable. So how you identify? You identify those expenses basis certain allocation method that you probably may adopt. So many times we have experience in the business that the most easy allocation of the indirect expenses and operating expenses over the revenue is basically the revenue turnover, your sales turnover. So we basically do the sales turnover and identify the entire thing, and then basis that you define those. But there should be reasonable grounds with respect to that. You know, certain expenditure which is predominantly not anyway belonging to that, you should exclude that. So you need to have a documentation built and trail defined while you're creating your allocation base. Do the deferred expenditure part of it? So no, deferred expenditure which you deferred for long period and you did not take it into consideration your P&L, that is a balance sheet part, will not form part of it. Prepaid expenses, yes, whatever you accounted for during the year, yes, that will be part of it. Outstanding expenses, no, which means like expenses which is being going to incur, and you have to take into consideration whatever the expenses that you incur. So any other expenses which is debited to profit and loss account. Now comes to another critical point with when you say about full-time employees. What do you mean by full-time employees here? So as per the calculation provided to FTA, necessary to keep the supporting document showing the derivative of FTA timesheets can be exampled. But many times this is not practical, especially like when we say that, you know, this is a headquarter business, there are 3 people who not only look into the FCP, but look into the business overall within the entire UAE. So how do you do that in that case? If I define the revenue and do the calculation with respect to the expenses incurred on the relevant activity versus overall expenditure, I will not reach it out. So you need to take a pragmatic approach here and define that you're a person who can be very closely associated with respect to the relevant activity. You need to define that. Ensure that basis of calculation of FTE is justifiable to the authority. So you can take your call. There is no right or wrong in that relation. If you have fair basis with respect to FTE, you can definitely define that. Example can be, if I can give example with respect to the distribution, that I can give example. Simple example can be a business which is involved into distribution and service center. I say that, you know, and they do a lot of FT, foreign connected person business. Then in that case, whoever is involved with respect to the foreign operation, they shall be reported. Employee like admin, HR, facilities working for all department for this. Some basis need to be developed and demonstrated by the licensee. Now, if you see here another question with respect to outsourcing, can I do an outsourcing arrangement? Can I do an outsourcing arrangement? Yes, you can do an outsourcing arrangement. You can outsource your SIGAs, but considerable point to understand here that since the year is already passed, I mean, you are sitting in 2020 towards the last and we are submitting the declaration. How effective for you will be to demonstrate that you have done the outsourcing part, whether the payment can be done. So there is a little bit of planning required. If you do not have the operation, effective operation here to justify the SIGAs are undertaken within the UAE, there is effective planning required and you have only 1 week to do that planning. So you can do differently that planning. You need to understand the name, address, TRN, the expenses incurred during the reportable period, the number of FTE provided by the outsourcing provider. Okay, the address provided by provided that of outsourcing provider or the licensee, and adequate supervision by the licensee over the SIGA, right? And did OSP perform the SIGA into UAE? So now, if you look into the entire thing, I may say that yes, I had an outsourcing provider in 2019 who was managing my core activities. I might be able to say that. What do you really require in that relation? You will be requiring that a contract to that particular fact. And a person who's outsourcing need to understand the impact of this contract on his business. So there can be planning, there can be effective planning that can be possible in that relation. Other key questions with respect to the reporting and notification. What is M&E group? So I covered that particular example with respect to 50% multiple entities. Difference in definition while you submit your notification. If we see the law refers to M&E group, whereas notification refers to multinational group. I take the example, I take the law over the notification form, and I continue the same definition which is defined in the law, ignoring the multinational group on the notification form. Only operate in UAE. The licensee only operate in UAE is not defined. So should export and import done by the local businesses in the UAE be considered as conducting business outside UAE? No, the law does not intend to say that if you're doing export and import, you are not doing the business within the UAE. The intent of the law with respect to this is that you have a foreign relationship. Again, I go back to the first point where I started the relationship. You need to ensure that FCPs are identified. Otherwise, whatever business you do locally here or you do outside is outside the scope. Key information on the foreign taxability aspect, licensee tax status. If the licensee is a tax resident outside UAE, does it has a valid tax residency certificate from a country outside UAE that you need to obtain? And foreign branch, if it is a foreign branch, proof of income of the branch is being taxed in the country where the head office is incorporated, need to be obtained. And that's what from my side, and I look forward to the questions that we have here.
Hi, thank you so much, CA Hanumanta and CA Anuragji, for your detailed explanation on the ESR and UBO regulations. We have a lot of questions from the members. What I will do is I will read out one by one with the name, and then I leave up to you guys to answer it for our members. So first question is from Mr. Jitendra Petro, and he's asking in the ESR report, we need to provide outsourcing information required as per the relevant activities. The fact is the part of the fund management team was seconded from the parent company and the part is from the company. The question is that we should report the secondment arrangement as a part of outsourcing activity or not.
See, with respect to the outsourcing arrangement, definitely you need to report, because if you see the fund management, the critical activity with respect to the fund management, if that is undertaken by the outsourced person within the UAE, definitely you need to say that yes, we have taken outsourcing arrangement from any party, but the resource is here, that what we need to corroborate. So maybe the outsourcing party can be outside, but the outsourcing activity happened within the UAE, that you need to corroborate with evidence.
Okay, he's also asking when a person is responsible for multiple entities in the group, can we create a single ID to do the notification or report for the multiple entities in the group?
No, it should be licensed, commercial license. Because each licensee is separate, so you need to create the login for each licensee. Basically, what is there? The report need to be filed, a notification need to be filed by the licensee. So if two licensees are separate, then you need to create two different login IDs. The branches are part of one licensee.
Okay, the next question is from Soumya Ghosh, and he's asking does free zone company held by a single UAE resident not doing any activity, also no relevant activity, still needs to file ESR notification and report?
That's very simple. No.
Yeah.
Not a.
If they're not carrying out of the relevant activity, not needed at all.
Thank you. The next question is from K. Ravi, and he's asking a company is having a 50% local and 49% expats and not part of the MNC and not conducting any relevant ESR activity. In this case, do I need to submit a notification under exempted category?
No, not required. Same question, not required. See, you need to submit only if you are undertaking a relevant activity and you fall within the exempt license, only then. So the first question is, are you undertaking any relevant activity? If you say, yes, I'm undertaking relevant activity, then the further test arises. If you're not taking any relevant activity, then in that case, not required.
See, the ministry has given a very good flow chart actually. Okay. So you just go with that flow actually. So first is a relevant activity. Then only if you're falling in the relevant activity, then you go to the exemption category.
Okay, thank you. The next question is from R. Benjamin, and he's asking like, can you please explain the business arranging a registration for the foreign company comes under the relevant activity or not?
Business? Can you repeat the question?
He's asking like a business arranging registration for foreign companies come under the relevant activity or not?
Yeah,
No.
it will be a service center business, but again, we'll have to see whether it's a relevant activity within the definition of economic substance regulations. He may be doing this a business activity, but we'll have to see whether that falls under relevant activity.
See, might be what he's referring is that probably he's into the business of incorporation.
Correct.
And he's doing multiple incorporation for a lot of businesses. No, it will not come because with respect to coming relevant activity definition, you need to have FCP, the important aspect is it. So except the lease finance and fund management business and shipping and other specific ones, so shipping, insurance, we leave aside, banking and fund management we leave aside, and lease finance. Apart from that, if you fall within the headquarter or service center distribution, it requires a foreign connected relationship.
Okay, thank you. He's also asking like it is a mandatory to file a zero activity report once the notification filed as a nil activity, as requested few months back.
Only if there's an income, then only you need to file the report. If there's no income, notification is sufficient. And remember one thing, important thing to mention here is that if somebody is claiming exemption, that is more difficult than filing a relevant activity. If you're claiming exemptions, you are under specific radar. That you are taking relevant activity, but by virtue of the law, you are there.
Okay, the next question is from Vikas, and he's asking like, is a sole proprietorship LLC is under definition of licensee? And he's saying that if it is yes, then the sole propriety owned by the Emirates, but not doing any relevant activity, then there is any reporting requirement under the ESR. I think the second part already answered.
Yeah.
First part is a sole proprietor LLC is under definition of licensee.
I mentioned in my initial listing itself, if it is license issued by the any of the Ministry of Economy, which is DEDs, then it is as good as an individual actually, because there is no share capital in those companies. There's no shares are issued, so it doesn't have a juridical person capacity.
Okay. We have another question from Ajay Malhotra, and he's asking like if entity is a dormant for its no relevant activity in the year 2019, do we need to file a notification or report for the none?
We have mentioned very clearly, if you are not carrying on a relevant activity, no notification is needed. Ministry has repeatedly said, so there is no need to notify.
And he's also asking like one person can file a notification and report for more than one entity.
No, it is for each entity level. Okay. He can be a,
Representative.
DCP or, representative for many companies, but it is for each entity level.
Okay, Mr. Dhanush is asking like, will a factoring business regulated by FSRA in ADGM or DFC will be considered as a relevant activity?
Relevant activity is not by the virtue of being regulated by somebody. The relevant activity need to be looked into the definition of the entire business. So, probably what is his business scenario? If you can share that with us, then probably we'll be able to answer.
Okay, we have another question from CA Mohandas Balakrishnan, and he's asking like, one have a lot of benefits by setting up a company in a tax-free zones like UAE, do you think that such companies will have now come out of the comfort level and revisit their strategy? Do you think that they still, or do you think that they still can plan it appropriately by complying with all the rules of the ESR?
No,
See,
ESR is not a tax, first of all, correct? ESR is only a compliance of a regulation where they're seeing whether any artificially or shifting profits from a high tax jurisdiction to a low tax or a no tax jurisdiction. It's not a tax like a VAT or ESR or a corporate tax. Here only you are seeing whether you are artificially shifting or you have a substance in UAE to book that kind of a profits or revenue.
See, one thing that I want to say that, the question with respect to ESR, why it came, because they were feeling that most of the professionals are not, take it by light note, or the most of professionals are like, they are missing their skill set. So if you are a global business, ESR will not impact you because planning is anyway there. They say, look, you utilize all these planning tools which is available to you, and then do the transaction. Just simple example, I can just cite it across to you. Today, if a UAE business is there, it wanted to do a bigger business with the United States. Can he do that? He cannot do that because the UAE and US do not have the tax treaty. So effectively, you are bound to have over 20% withholding tax on the repatriation that you get of the money. So what people do that, people, if you are smart enough and you have a right people along with you, they say, okay, let me route it the entire transaction through UK, because US and UK has a treaty, and whereas like UAE and UK has a treaty. So let me do a structuring in that way around. UAE businesses, there are a lot of businesses out there which do that planning, and by virtue of that entire planning, they save the tax, and that they do it legally. I mean, today that shifting of the profit is prohibited. People want to say, don't do that. That's why like CBCR situation, the transfer pricing provisions are always there in the country. But that does not bar from people to avail the tax exemption which is available to them. So you can very well avail those tax exemptions if you follow the right route. Now, ESR will force people to have a right tax planning. So it will create more job for the professionals here in the UAE, and they'll be in high demand. So people who know the maths of doing this tax planning globally, pretty much good. And we see a great surge. We see a lot of businesses now with internationally, and people come for that level of things. How you see tax going 4 years from now or 5 years from now, and what shall we take into consideration with respect to that. So ESR is good for profession, and with respect to the businesses, everybody feel transparent, and the more transparency brings better business from different part of the world. And good corporates always prevail transparency. They believe in planning.
So just to add to what Anurag has said, see, now with the introduction of ESRs, okay, all these big corporates, they're not doing anything illegal actually, okay, earlier also, even now also. Only thing is they are planning the taxes in such a way that they're taking advantage of the tax loopholes that are currently available. So assume that if globally, if it is only one rate of say 30%, 35% corporate tax, then whatever you do, anywhere you do, impact is same. Okay, one place it is 10%, one place it is 35%, one place it is 0. Okay, what they're saying is, okay, still they're not saying that, okay, don't do business from 0. What in the regulation they're asking is, okay, whatever you're doing from a country like UAE, where there is no corporate tax today, only thing is, okay, you're genuinely doing the business. You are not just only doing the invoicing actually. So you just prove that you have a substance here, then it is fine. So book profits, no problem, but prove a substance. It's just not only doing an invoicing vehicle or, managing your business sitting, somewhere from UK or US, but genuinely there is a business happening. There are people, decisions are taken here. You have an adequate expenditure, core income generating activities are, decisions are taken here. This is what the requirement of this particular law.
Thank you. We have another question from Sudhakar, and he's asking like, if a company has a 2 shareholder with an equal percentage, portal does not have an option to report more than one parent company. So he's asking like how to solve this.
Come again, I missed actually somewhere last.
What he's asking is like a company is having a 2 shareholders with an equal shareholding percentage. and portal does not allow or does not have an option to report more than one parent company. So how we can solve this?
Parent can be only one.
One only. There can be multiple UBOs actually.
Yeah, you need to take a test and then identify. That's what the example that I given you, 50-50%. I given you example. I covered that into my presentation. So if the parent is not identified, then you go to the ultimate parent entity. If there's also you're not able to identify ultimate parent entity, then you go to the UBO directly. So there's no parent and there is no ultimate parent company. It's not necessary that you must have a parent entity. No, it's not necessary. Because you may have a JB. A JB can be 50-50 or 75-25. And that way around, if the 50% JB is there, and by virtue of that JB, you incorporated an LLC organization, and it has 50-50% shares, may not each of them consolidate by virtue of the law, because I don't exercise the control over that. Control is with somebody else. So I consider it being an investment into some business, and I define that as an investment or an associate entity. I may probably combine for my management reporting purpose, but may not consolidate. So if I don't consolidate, I don't fall within the UPC. If I don't exercise the sole control or bigger or major control, influential control over the business, then I don't become a parent as well. So it's only the UBO. So you may say no, and then go forward.
Okay. We have a lot of questions coming in now, actually. So I'll just take another like 3-4 questions more, and then we can ask all our members to send it directly to you guys, and then we can send it to us, and then we can forward it to you guys, and for the benefit of answering one by one, because it's going to take a long time. So what I will do is I will just take last 3 to 4 questions more, and then we'll just ask members to send it to us, and then we can put it forward to you guys. So we have another question from Nisarg, and he's asking like, new definition has slightly changed, but it is having a same meaning. I mean to say, if parent company is having its own commercial activity, it is not having a RA, relevant activity. Is this correct?
See, parent entity, the relationship again here, it starts and ends with the relevant activity definition. So relevant activity definitions, not much of the change. I consider it's the same, remain the same. What the change has come into the relationship. That's where I begin my first slide. Relationship is the key. If you define the relationship with FCP, and if it is identified as FCP, definitely you need to go ahead on the ESR notification and reporting.
Okay, Mr. Chandrasekharan is asking like, we have a contracting company in Qatar, 100% owned by us as a branch. Do we need to submit a return?
Again, Qatar is subject to tax, correct? If Qatar is subject to tax, so that need not be consolidated here. That will not be consolidated for the purpose of this particular regulation, because it's already taxed. You can avoid the maybe they may have to comply over there actually for that.
Okay, we have a question from R.K. Mehtaji, and he's asking like, doing a business, doing R&D business by Free Zone LLC to create an IPA is a relevant activity.
Yes.
Yeah.
Yes.
Provided you have identifiable income also. Okay. Again, we'll have to look into the details actually, how your R&D, what kind of an R&D you are doing here, or you are acquiring this from elsewhere. So we need to do a little more detailed analysis of that. But as such, having an R&D, okay, what is your business plan? What is that? Are you going to make money by giving this R&D to somebody? What is the business plan we need to understand actually?
Okay, the last question we will take it is like, he has not mentioned his name. So, but his question is like, in case of corporate structure change happened during middle of the year, does it impact ESR reporting entities from the holding company business perspective?
Yes, it is.
Yeah.
Basically, because what the ESR talks about, the reportable period. So if there's a merger and acquisition taken place, you will need to take the part of part and parcel in the merged entity and the remainder actually. So you need to see that the part of income will gonna go in both the financials. The important things I want to say before we conclude, just to say to people that if you are a foreign business, it is not going to change. ESR will not going to change the flow of the business into the UAE, because the foreign establishment, whichever were operating through UAE and which is coming from foreign, they anyway have the CFC rule defined within that entire ambit. And if they don't fulfill the substance requirement here, anyway, their income was supposed to tax in the country of their own jurisdiction. So there is no change. Until now, they were not realizing that their income, whatever they were having in the UAE, without a substance, was supposed to be taxed in the country. So if the foreign tax people, they know that you don't have a substance here, anyway, you're supposed to get taxed there. So this ESR will actually, it helped them a lot of way that, now at least they know that I have a substance, so my income is not subject to tax. I need not to give explanation to my country's ITD actually.
Okay. Thank you so much. In the interest of the time, we need to close it now, actually, and we request all the members to send us the queries which they have it, and then we can forward to our speakers.
Yes,
Can I take one question? Yeah. Suppose if there is an ambiguity in terms of relevant activity, is it advisable to file the notification and report, or what is your advice on that?
See, yeah, go ahead, Anman sir.
Yeah, I mean, you will have to determine, because otherwise which head you will ticket actually. So you need to know.
No, if there is an ambiguity in one particular, say for example, service and distribution, there is yes, it may happen or it may not be considered, whatever. So is it advisable to file? I mean, is there any harm in filing if we are not absolutely clear?
Take a conservative approach, yeah.
Yeah, okay. Right, thank you.
Sorry, Anurag, you want to add something?
No, you're right, sir. Probably need to take in the call in relation to that.
Okay, thank you once again, Mantaji and Anurag ji, and I now hand it over to our Vice Chairman, CA John George, for the vote of thanks. Thank you.
Thank you, CA Ajay. Good evening, everyone. It's my honor and privilege to propose vote of thanks for today's webinar on economic substance regulations. Today's webinar was engaging and informative. I'm sure that all members attended today have enhanced the knowledge on ESR, and I hope now we have enough knowledge to submit notification and file the report. I take this opportunity to thank C. Hanumanta Kumar, founder and managing director, MCA Management Consultants, for taking through the amendments, the economic substance test, and the notification. Thank you, C. Hanumanta. I would also like to thank C. Anurag Chaturvedi, managing partner and CEO of Chartered House Tax Consultancy. And he has taken us through the reporting and the substance test. And he also explained about the ultimate business owner. Thank you, C. Anurag. And your session was wonderful. And I would like to also thank our committee members, the PDC team, for making this event successful. And I would like to thank also our sponsors. And I wish to express my gratitude to all the participants. And I hope it was a great learning for all of us. Thank you for being with us this evening. It's been a great pleasure. Thank you all.
Thank you.
Thank you.
Thank you, everyone.
Thank you.
Thank you, Hanuman Saab.
Thank you, sir.
Thank you so much.